Well, hello, everyone, and welcome. This is Cynthia Tomaine with Interactive Brokers, and thank you for joining today's webinar, where we'll be discussing the future of technology stocks with Frank Kaberna of the Small Exchange. So with that, let me first move this over to Frank's slides here. Let's get those on screen. And Frank, I'm going to go ahead and pass you the controls. So take it away. Let's get underway here this afternoon. Thanks for joining us, Frank.
Thanks so much for having me, Cynthia, and thanks everybody in attendance here, the fine traders at IBKR. Very glad to be speaking with you this afternoon about the future of technology stocks. This is, it's going to be a really interesting presentation. We're going to talk about an index that the Small Exchange went out with a little over a month ago, futures that launched on that index about exactly a month ago. And I also want to give a backstory for why we decided on technology stocks, why we built this index the way that we did, very different than traditional technology products that you have at your disposal today and prior to our launch of a month ago. And I also want to get into some use cases that you might find for this new small exchange product. So without further ado, let's get into the future of technology stocks. If I can just get the slides going here, we have a few disclosures here on the front end of the presentation, and we can now move into what we're talking about, the Small Technology 60 or the STIX product here from the Small Exchange. Something that we're super excited about. It's been trading for about a month. We've seen the most volume of any of our 4 products in this STIX product for the last month, being very well received. We've seen great liquidity in that. I know people who are aware of the Small Exchange, a lot of questions about a futures exchange launching just a few months ago and the liquidity around that. It's been great for this product. We've, like I said, had a lot of interest in it, a lot of market makers in their tightening markets, and then a lot of retail traders like yourselves just trading around, speculating, using it to invest in technology and using it to hedge. But before we get to all of that, let's do a little bit of a background here on the product itself. So yeah, our other 3 pre-existing products that we went out with when the Small Exchange launched a few months ago is Small Stock 75, the Small Metals, and the Small US Dollar. And so we had a stock index future, this commodity metals future, and foreign exchange product there with SFX, the dollar. And so with the newest addition here being technology, we went back to the equity well for the newest product. And we really think that it doesn't cannibalize the trade in the small stocks. It's actually a really nice complement. That Small Stock 75 is 75 stocks across 5 sectors, of which technology is one, and accounts for 15 of those 75 stocks. With this small technology, we decided to just go into that tech sector and go as deep as we possibly could with 60 stocks that are in that sector itself. But we also, as you'll see in this presentation, we created subsectors within technology and grabbed stocks that we felt aligned with those subsectors. Very untraditional method relative to other technology products like XLK, the Spider technology ETF there. And a lot of people view these days NASDAQ as a technology product as well. And we'll get into those differences between our product, both in the underlying stocks that make it up, those components, and also the weightings and the size of the product. But before I do any of that, I want to give some background on why we chose technology. And this slide really tells that whole story for me here. As you can see, in the last decade, technology has performed better than all of these other major sectors that make up our stock market here. You can see it's several hundred percentage points better than some of these other sectors, including industrials, materials, financials, and energy. And this isn't to say that the next decade technology will continue to outperform, and we wanted to create an index that is the best performer and we think will perform the best in the future. Absolutely not. As many people know, that you can't really look at the historical action here to drive what will occur in the future. But what we did say is, as technology takes off and it becomes at the forefront of most investors and speculators' minds, why don't we go just, like I said, go as deep as possible into that sector and not dance around it like some of these other stock indices do, because you see here that um, technology exposure has grown to become a huge part of the Dow Jones and the S&P 500, and almost half of that Nasdaq. These major indices that have existed for decades, and the Dow Jones's case has existed for a century. And these are indices that were over a decade ago largely ruled by energy stocks, and before that, it was industrial stocks, and this kind of thing transitions in and out, which makes these indices, stand the test of time. But here in 2020, we wanted to create a product that wasn't, like I said, dancing around this technology exposure. 24% of S&P 500, and most of if the S&P 500 is up or down a percentage point or two on any given day, the first couple names that you're probably going to associate that with are technology stocks. And so we didn't want, this index that has 50 or 100 or 500 names, whatever it is, and have it just be, oh, half of it is focused in a couple of these technology stocks, and then you have all these other, 95% of the stock names account for just a couple percentage points of the actual action. We said, let's just give the people what they want, because they seem to want tech, and you can see that the index with the largest tech weighting has performed the best here. And this is really something that we took as an influence, but didn't want to try to mimic, because we didn't want to create another stock index for you all to trade that is simply different from these other ones by a degree of how much technology exposure it has. On most days, if you're looking at the performance of these three major stock markets, and you're seeing the variability of that performance, it mostly has to do, especially in the last couple of years, in the last decade, it mostly has to do with how much tech exposure they have. You can see that these two slides, they are directly translatable when you talk about 45% tech in NASDAQ and only 20% tech in Dow Jones. And then you see NASDAQ outperforming due to that greater tech exposure. And so we didn't want to mimic any of that. We didn't want to get into this game of how much Apple exposure do you have. Dow Jones 10% Apple, S&P 500 6% Apple, and NASDAQ 14% Apple, which is kind of crazy if you think about it. NASDAQ is an index that has futures and ETFs that you all can trade, that it pitches itself as the NASDAQ 100. That's 100 names, one of which takes up 14%. And the next one, Microsoft, takes up about 13%, and Amazon is, I think, close to 10%. So right there, you've got 3 of 100 stocks that are taking up a big chunk of that exposure, which isn't incorrect. These S&P 500 and NASDAQ are market capitalization weighted indices. They've been like that forever. And so that means that as tech grows and as Apple and Amazon and Microsoft perform better, they're going to gain percentage points on the field for the rest of those stocks that make up these 500 names and those 100 names. But this is something that, like I said, we got to reflect on here in 2020, and we got to shift around. We said to ourselves, we don't want to have this potential problem of, a couple years down the line, we've got our small technology 60 index, and we've just got an index once again that has its top 3 names accounting for close to 50% of the exposure. And so, and you see here, once again, it's just a matter of how much Apple or Amazon do you have, and I also threw XLK in there for this performance as well, because if you invested in NASDAQ relative to the S&P or relative to Dow Jones, you're performing better, and that's directly on the back of the performance in Apple and Amazon and stocks like that. But what happens when we start to see cyclicality kick in, when we start to see some downside in your Apples and Amazons, you want to look at potentially a more diversified market for investing and speculating. And so this has all fed into our STIX product that we'll get to here in a second. Another thing that's really affected us here, that's really been on our mood board for creating this index and the futures that are tradable on that index, is the expensive prices of these technology stocks. XLK, that leading tech ETF, $115, which is a lot when you're talking about shares of an ETF that you need to post 50 or 100% of. Apple just thankfully split 4-for-1, and it's still over $100. Amazon hasn't split in a while, and that's a $3,000 stock. And like I said, when you're talking about stock margining and putting up 50 or 100%, this is a hefty price tag for just one share of these single stocks. Not to mention, getting exposure in a diversity of technology stocks and at a cost that isn't as high as that 50 to 1%. Well, enough of that background, enough of that context. I'm really excited now to get into our product, the Small Technology 60, the STIX. As you can see here, this nifty little graphic that our production team put together, our icon. We've got the computer chip signifying technology, and then you can also see embedded in there a couple of interesting little icons within the icon. You got a little test tube kind of thing going on, the cloud, a shopping cart, and a play button, and that will lead us to the sectors that make up our Small Technology 60. This is truly an innovative way to construct a stock product that is a sector, so to speak. You have those spider sector ETFs that I've already referenced, XLK being the technology one. You got XLE and XLI and XLY. All of those ETFs, if anybody's done research on sectors that you've most likely come upon, they're very popular products. But similar to the S&P 500, which they're broken away from, their market capitalization weighted ETFs there, which means that if you're looking at the S&P 500, and the S&P 500 is 6% Apple, that's the top weighting, and then you break out the tech there, it's going to be still mostly Apple. What we said is we don't want to go away from Apple, but we want to throw in these other sectors that we feel do account for technology exposure in 2020. We have biotechnology, we have information technology there, which is a lot of the names that most of you are probably used to hearing, Apple, Microsoft, and those. We also have retail, which is where Amazon lies, but also some interesting companies like Shopify and other new companies that we feel mesh retail and technology there. And then you have media as well, as you see companies like Twitter and those younger stocks make up that. But we also went with stocks like Disney and some traditional names there that you might not have thought aligned with technology. But when you think about the fact that most of that company now is pivoting towards streaming services and technologically oriented fields, we thought that aligned with this technology that we're trying to put into our index and the futures that you can trade. And so here are all the names that make up our index and that align with these specific sectors and information. Once again, like I alluded to, we're not going away from Apple. It's not, we aren't trying to create this new technology product that is a bunch of names you've never heard of and it's going to move like crazy. No, we just wanted to create what we thought was a more robust technology product that isn't only Apple, Amazon, and Microsoft. We have Apple, we have Amazon, we have Microsoft, but we also have some interesting companies in information like semiconductors. We've got Micron, NVIDIA, and those companies there. In retail, we have Baba and eBay, companies that you would think, oh, those do align with a technology retail company, but we also have JD.com and Shopify, like I already spoke to, Uber, also in there, and Wayfair, which has been moving like crazy, and has now gotten to a point where that's a big market capitalization stock that we think should be thought about when people think technology trading here in 2020. And that's actually a good place for me to put in a quick aside. We structured this index with very strict um, uh, barometers for liquidity and market capitalization. This was one that we wanted to get innovative with. We wanted to find some interesting companies like you see over there in biotechnology, which especially amid this pandemic, some of these names you probably see more often than you have in the last 5 to 10 years. But we made sure that these are companies that have been around for 5 to 10 years, that are showing daily volume and liquidity measures within the single stocks that are good enough and that we trust, so that this stock isn't going to go crazy and move this index around. And we also made sure that they're big market capitalization stocks. We didn't want to just grab the biggest stocks in the country here. That's been done before with your S&Ps and Dow Joneses. And it's not to say it's a bad thing, but we're not here to replicate. We wanted to innovate here, but we also wanted to make sure that we did so in a well-structured environment. And so you've got media companies like ATV and EA Games that are interesting and semi-new, and then you've got your Disneys and your Comcast that we still felt like they're older companies, but they fit the mold for media technology here in 2020 as those companies transition. And then probably the most intriguing piece, the newest piece to most people, is those 15 biotechnology stocks here. You've got large pharmaceutical companies like AbbVie and Bristol Myers there, ABBV and BMY. But we thought that those companies, similar to Disney pivoting to more technology and streaming oriented business operations, those companies now are pivoting a lot of their pharmaceutical operations to biotechnology R&D and figuring out new drugs and new ways to look at things like the current coronavirus. But you also have some interesting names like Moderna. mRNA has been in the news a lot and has been moving around a lot. And REGN, Regeneron, another one, Abbott Labs up there. A lot of interesting, cool names that we threw in this Technology 60, not the traditional technology product by any means. And once again, we have Apple, Amazon, and Microsoft in here. And we don't want to go away from the fact that Apple has returned 68% this year, Microsoft 38%, and Amazon 80%. That's absolutely welcome and a part of the small technology 60 index. But what we didn't want to do is say that those three names and those three moves account for all of the technology products movement, which we've seen in products like XLK or NASDAQ futures or ETFs. We said we've got 60 names, Apple, Microsoft, and Amazon, very important, but we're going to give them a nearly equivalent weighting as some of these newer, more slightly smaller companies like Wayfair, Moderna, and Shopify that you can see have had huge returns this year, and we're giving them the same weight. And so this is really an index where performance is going to lead a lot of the action, which sounds crazy to say, but it is something that needs to be said. I'm sure a lot of you have, read articles or seen some form of content about the fact that 450 of the S&P 500 stocks could be in one direction, but at the end of the day, Apple doing whatever it is on any given day is going to push that index around the most because of its weighting. Once again, that's not wrong, but we wanted to build an index whereby the movement of the index is going to be correlated to the stocks that are moving the most. And so you have the same weight, but a different effect here because the performance was different in these three stocks versus these three stocks that are more household names. And this is just a little interesting way that we build our stock indexes and the futures that trade on them here at the small exchange is to give each of these stocks near equal weightings. Otherwise, why would you create an index of 60 or 100 names or 500 names if the movement's going to be dictated by just a few of them? And so, yeah, it's a little bit of a level playing field. But that's not to say that this is, a product that's on a different planet here. You've got the STIX with a correlation of 0.95 to the micro NASDAQ or any NASDAQ product, a derivative that you'd be trading there. That's about as high as it gets without being the same exact product. Correlations on the high end only getting to +1. 0.95 is, I've done a lot of research and trading and financial content the last 4 or 5 years here. That's as high as it gets unless it literally is micro NASDAQ against QQQ ETF shares. And so, this is a product that moves similar to that NASDAQ and other technologically oriented stock indices. But it has that variability, like we just showed, of having biotech exposure and then also equating some of that weighting. And that's what creates for a truly new product that you can trade against these other things. Because, yeah, if we try to mimic this NASDAQ or S&P or Dow, then why would you want to add that tool to your box here? And another thing that is kind of slid in here amid the correlations that are all very high relative to NASDAQ, S&P, Dow, and even Russell. But as you could imagine, Russell 2000 being 2000 small cap stocks, not a lot to do with our large cap technology products, but still a pretty good correlation. You'll also see that you need a lot more STIX for each of these micro futures. And that's because we created a product here that is truly small. Our small technology 60 next to the micro NASDAQ, it's two things trying to get to the same end goal, which is a smaller product for the retail trader. We feel like we've done that. We've taken that idea a little bit farther. You've got micro NASDAQ futures already at $23,000. That's a product that the CME launched to get to those smaller traders as NASDAQ, like in the slide I showed earlier. It's climbed about 400% in the last decade, and with that, the size of the E-mini NASDAQ futures and the QQQ ETF shares have obviously climbed as well. Thankfully, here in 2020, we're creating a new product that we think is a nice size here at $5,200 relative to these micro futures, some of the smallest equity index futures in the field here that are 3 to 4 times as large. And then, you can also use this STIX product as a replacement or as a companion to shares of QQQ or XLK, SMH, the semiconductors ETF, XBI, the biotech ETF, and then ARKK is a popular technology ETF that a lot of people invest in. This is something that equates to, a handful of shares of each of these ETFs, has a very high correlation. And you can replace maybe some of that exposure, and it's going to cost you a good deal less in terms of that margining, because here at the small exchange, we don't like to necessarily lead with the fact that we are a futures exchange and we're creating derivatives. A lot of that language in people's minds leads to complexity that makes them maybe turn off and not want to get involved, because shares of QQQ or Apple stock itself, a lot easier to jump on board with. But we use that futures exchange, the fact that these products are futures on indices, largely for this smaller margin here. So you can invest in technology that has a high correlation to NASDAQ, S&Ps, or the technology ETF, XLK, and the rest of them for a fraction of that cost. And so a lot of uses here due to the smaller product size and then the futures efficient margining on top of that small product size, which is going to lead to right now a margin that's approximately $500 to trade that 5,200 product of 60 tech names across all those different sectors. And yeah, there's a few different uses here for the technology 60 product. A lot of people, myself included, tend to immediately think speculation on short-term action, but like I was getting at a little bit there, there's also a nice case for using this product as an investment tool for long-term technology exposure. And as we're seeing with technology taking up close to 50% of some of these broad market indices, technology in a lot of people's minds is just equity exposure on the whole. And then also the hedgeability, which is maybe not the most attractive use of a new product and a new futures product in particular, but it's honestly one of the most useful things that you can do with a futures product, and the one that we're bringing to the table today. So speaking to that speculation piece a little bit here, we've seen just in the last month or so of this product being launched a lot of back and forth here, and you've got about a 10% range here in the small technology 60 futures, and in that 10% range, touching that high and low, or at least getting within close distance of those highs and lows about 6 or 7 times, and that's all in a product that 10% movement, two-sidedness, showing both opportunities to potentially sell or buy, and a dollar range that's only $400-$500. You equate 10% movement to the current micro Nasdaq, and that's closer to $2,000 worth of movement there, and that's something that we didn't want to have to a barrier we didn't want to put up in front of potential traders like yourselves, which is you can get to that $2,000 movement over the last month by scaling up, but you can make that as small as $400 or $500. And on a daily basis, this is a product, and we've actually done this with our whole suite of products. On average moves about $100 per day, and on outlier days a couple of $100 per day. Whereas if anybody's been trading E-mini Nasdaq or E-mini S&Ps or even the micro versions of those, you're seeing on some days thousands of dollars of movement, especially in those E-minis. The average move in the E-minis is thousands of dollars of movement. In the micros, it's already getting close to that again, especially on the volatile trip that we've been the last 4 or 5 months here. And so yeah, a lot going for it in terms of that short-term speculation. You've got the smaller margin, you've got a product that is back and forth, touching those highs and lows, and not doing so in a large notional manner. And then also the investability of this product is truly there. We think you've got something that moves a lot like technology did this year. When you think about NASDAQ and XLK and all of that, has pretty much the same variability and has performed up about 30% on this year here in the small technology 60 futures. And that's going to come at a cost, like we spoke to already, that is a fraction of shares of QQQ and XLK and the rest of them. And so that efficiency, not only great for short-term speculation and trying to make 50, 60, or $100 here or there on a low margin product that's moving around, but also if you do want to invest in technology for the long haul, something that's not going to tie up a ton of capital, and also something that is truly diversified across 60 unique stocks here. Something that's kind of underrated about recent movement and index construction is the fact that when you buy S&P 500 or NASDAQ, you are at the end of the day tied to a few stocks. And while those stocks have performed very well if they start having some down quarters, that investment is not truly diversified. And I know ETFs and indices at large are often marketed as a more diversified option for people to invest in. But when you've got that more diversified option and 50% of its exposure is in the first 5 or 6 names, that's not true diversification. So we have this product here that is highly correlated to these other big name ETFs, but smaller cost. And we think definitely some intriguing names as well that pair with that diversification. And then also, say you do have shares of NASDAQ or S&Ps or some other some technology stocks. Maybe you've got 5 or 6 that you've picked out. Great, easy, simple, and low cost hedge as well. And like I alluded to earlier, this is something that's often, I think, a little underrated and is viewed as being a little unsexy, but I think can be an interesting opportunity for long stockholders, which is to say, maybe you're feeling some fear or tension in the market, or you simply want to take some profits off of the table in something like NASDAQ here. And a good way to do that is with futures that don't require that you just sell some of those shares. You could just put on a short-term hedge here. And so, maybe prior to the fall in February and March, you feel some tension and you want to hedge, 20 or 30% of your portfolio. Thankfully, small exchange futures are smaller, so you can get a little granular with how much you want to hedge. And they're easy, low-cost products to sell a little bit here, buy it back, sell a little bit, buy it back. And you soon create with this hedging strategy actually a cool little almost speculative strategy that's just around your core. And like I said, it can be for some people, and hopefully this is the case most of the time, it's a matter of taking a little bit of profit off the table. This stock market has run up, like I showed you at the front of this presentation, over 400% the last decade. That's a great run. I've made a lot of money on my investment. In the short term here, I want to take some of that off the table without having to go into my 401k or having to go into my portfolio here at IBKR and just simply sell out of those positions. I just want some short-term hedges. This is a great product here in the STIX to get that done. And then also something that you're feeling a little uneasy. It's a great risk management tool in front of some events like we've seen this year and some volatility that will surely continue. And so that is my presentation here for the STIX, our new small technology 60 index, and the futures that are readily available for you all to trade here at IBKR. And also, before I field some questions here and get out of your hair, we also have this small exchange subscription, which is exclusive to those people who sign up with the small exchange, but works through your IBKR account. It's a lifetime subscription for $100, whereby you're going to get discounted exchange fees. And I was just looking at some of the IBKR website content this morning, and small exchange products already have the lowest commissions that IBKR charges of any futures, but we're going to actually cut those exchange fees from our side in half, creating even a lower cost trade for small exchange futures. Reduced market data fees. We have $0 market data fees here for the first year, so everybody can jump in and try out these small exchange products with the lowest barriers to entry. But we will also ensure anybody who subscribes to our exchange, they get those reduced lowest of the low fees while we can still turn the lights on for life. One-time payment, $100 lifetime subscription, and also starting actually in the next week or two, a project that I've been spearheading here at the exchange, exclusive content around trading the smalls. We're going to have trading ratios between small exchange products and the top candidates to pairs trade or hedge against. So in the STIX here today, it would be ratios that you can trade micro NASDAQ futures or XLK shares or semiconductor ETF shares, all those ratios and correlations updated for you on a weekly basis, as well as daily ranges, standard deviations, and a bunch of other advanced metrics for all the products here that create a great companion for you when you're trading the smalls, as well as weekly commentary, high-level stat-based commentary around small exchange products and where we see some potential for opportunity in the future. So that's that subscription. Go to subscribers.smallexchange.com to get some more details on that. Like I said, we're in the midst of updating it. Very exciting stuff there. A lot of new stuff coming from the small exchange, be it the technology 60 futures or the subscription, or actually we probably are not done for the rest of the year as well. We should have at least 1 or 2 new products coming your way. But that is all I've got for you on Small Technology 60 futures. And
at this point,
with
well, thank
that,
you, Frank. At this point, what I'd like to do is jump in and just let everyone know that there is a questions panel. If you've got any questions for Frank at this time, notice on the right-hand side of your screen in the control panel, you'll find a questions title bar. Simply double-click that title bar, and then you can type your comments or questions for Frank at this time. So I'll send it back over to you, Frank.
Thanks so much, Cynthia. I'm glad that you jumped in there so I could get a quick drink of water, take a breath, and look at some of these wonderful questions, and hopefully ask some frequently asked questions of myself and get the ball rolling here. I believe the symbol for STIX, James, is STIX on the IBKR side. I know also if you go into the platform and start to type out small technology, it should start to populate there as well. But I'm pretty sure IBKR doesn't use any of the / or crazy other inputs that you need. So I think it should be as simple as STIX. But like I said, if you're having any problems, maybe start typing in the name of the product, Small Technology 60, and hopefully that gets there for you. And then we have David here asking about a PDF that shows weighting of the 60 stocks, not just the shares. I agree with you that those fractions there are relatively worthless for the retail trader. I clipped that off of our index provider website, and they post that more for market makers or CFTC, other regulatory places. And yes, I would agree that percentage weighting would be a lot more helpful. But here's the thing, and this is what's nice about it, is we created this index about a month ago, and all those percentage weightings are going to be between 1% and 2% as of today. So we'll work on getting that updated to our website. We actually have one of our main data people over here has brought this up time and again, and it's definitely in the docket. But like I said, not something that you maybe need to worry about for the first few months of trade, because we started out with equivalent weightings and they should all still be around 1% to 2% as of now. How often are we rebalancing? So interesting question, because with the small stock 75, a big part of that product that we launched a few months ago was that we wanted to stay on top of that thing, make sure that nothing got too big or too small there. And so there is an annual rebalance with that product. With this product, we leave that more up to our index team. And so they meet every year around the same time that the small stock 75 is rebalancing. And they ask, okay, what's the biggest component here? What's the smallest? Is that too big or too small? And then if they think so, they will go about doing the rebalance and notify all parties that that rebalance is coming. But we do not have any scheduled rebalance in that product. It's equivalent weighting as of its creation a couple months ago, and we're going to ride that out for a little bit until something gets a little too big or too small. What's my opinion on the impact of 5G, AI, and et cetera over the next 10 years? So yeah, this is an interesting one, and I see a couple of these questions are more opinion based. Are tech stocks in a bubble now, and all of that, and that's I love those questions, and that's exactly why we put this product together because I've done a lot of content outside of what's been a great webinar here that does lean a little bit more opinion based. And when I do speak to just the state of technology stocks at large, I right after showing that percentage chart of 400% from 2010 to 2020 relative to energy stocks being down 50% and materials and finance kind of being just a little bit north of unchanged, I show the same version of that chart, but from 2000 to 2010, and what you see is almost the inverse story. Energy stocks soaring in that time frame. Energy stocks in that time frame being the top names. Exxon for many years was the Apple of the S&P 500. And so with that said, I am a firm believer in the cyclicality of markets that, at no point since the Dow Jones Industrial Average was created at the turn of the 20th century there, at no point has there been a sector or a company or a group of companies that has just perpetually gone up and survived decade after decade of outperformance. That being said, is it going to occur here in October? Is it going to occur in 2020? Is it going to be 2021 or 2022? That's the question. And as we've seen, especially in the last 4 or 5 years, technology especially taking off, the timing is absolutely the question there. So yeah, I would agree that there's got to be some kind of reversal here, some kind of convergence to those other companies. I'm also a big believer that a lot of those energy companies will pivot to practices that could bring them back to higher market capitalizations and higher stock values. And you'll also see some companies like you've seen in the last few years that make use of solar resources. Those might start to grow and make up what is considered energy. And so maybe you'll see a little bit of that convergence. But yeah, it's hard for me to say what the impact of these parameters here are, or whether or not the tech stocks are in a bubble. I don't really subscribe too much to bubbles or stock market crashes or predicting any of that. It's just a simple, you have your opinion, you trade back and forth, and thankfully we have a product that allows you to go straight to those technology stocks and form that opinion. What is the minimum investment required for small exchange? So all of our products from our side have a margin that's between $100 and about $500 or $600. That being said, your specific broker can choose to add a little bit on top of that. We have our risk team, they have their risk team, and they can choose to put a little bit on top of that. But I think that IBKR is pretty competitive with that, and so I think our currency product has a margin of around $200 or $300, and our stock products here have a margin of around $400, $500, $600. So that is the minimum to trade. And then also, if you do have day trading margins, that could be a fraction of that as well. So, but that's the per one contract, what you're usually looking at. When will trading be on a small exchange? I believe that these products should be up on IBKR right now. If they are not, I would contact. If you're not seeing them, you maybe don't have futures permissioning or something's going on with your platform. I would look to contact the support team at IB for that. The timetable for options. This is a big one that there are people as we speak here, and thankfully I get to hang out with you all and not have to deal with all of the back office that goes into launching options. But there are people right now that are working on this project. I can't give any dates, but we are aiming for by the end of the year. If that doesn't hit, like I said, there are people devoted to this project exclusively, and that is something that we're trying to get out as soon as possible. With that being said, options on these products is one thing. We're also looking to launch a few products by the end of the year as well, and that I can be a little bit firmer with those dates that we will get out at least one or two more products across some different asset classes, not stock products, not currency or metals. You'll see some stuff start to pop up, hopefully as early as the next couple of weeks. Small exchange follows other indices or individual companies. And so this is a bit of an existential question here, Pedro, for futures exchanges at large. A futures exchange can, in theory, create an index out of anything. Something that I often bring up is the Big Mac index, which a lot of people is a fun way for people to sort of engage just inflation over the years. It's just literally an index that tracks the price of a McDonald's Big Mac meal since its creation. And obviously, the Big Mac meal has gotten more expensive since its creation. But that's just an example of something that a futures exchange can create an index out of, and then create futures out of for you all to trade. And so it's not a matter of this or that. It's just more a matter of it's easier to create an index out of companies that already exist, and then futures on top of that, relative to an index out of Big Mac prices, or square footage of real estate in New York City, or one that's been tried often is weather. Average temperatures in Midwestern regions or East Coast regions, or Southern Hemisphere regions, and everything like that. The problem with those is, while they're very innovative and cool, and you maybe like some potential exposure, especially if you're a farmer, you want those weather futures. It is difficult. For the next step after creating a cool index is getting market makers to be able to quote that aggressively. And how are they going to quote that aggressively? Well, by laying off risk elsewhere. How do you lay off risk in a weather futures? I don't know. And so that's why it's real easy to create indices and futures out of companies, because then those market makers can go in and say, oh, I can sell your STIX product when I feel like it's a little overvalued, and buy the basket of stocks that's very accessible. So yeah, it's not an either or thing. It's more of a, what we can do, and what we feel is good for a good future product for all of you out there trading. And some just nice messages here from Edson. Thanks, man. Appreciate that. Our opinion on cryptocurrency. This is one of those products that we are definitely trying to dip into. It's obviously one of the newer asset classes, one of the newer products that everybody has, that everyone is starting to gain more and more access to. And also, I think it's one that teams that idea with something that has staying power. If you asked me 5 years ago about cryptocurrency, it was a big buzzword, and blockchain. Everybody wanted to say blockchain and cryptocurrency and Bitcoin as much as they could. But it's shown over the years that this is an asset class that I think will stand the test of time. So we're working on getting you a small cryptocurrency index that you see some of the current landscape for the cash market for cryptocurrency demanding a lot of capital to trade, and not as transparent. You see some of the futures, they're still demanding a lot of capital, because it's kind of still a wild west of an asset class when you think about gold and stock markets that have been around for decades here. And so we're working on a smaller version of that. And yeah, definitely, I don't have necessarily a bullish or bearish opinion on it, just an opinion that says I think that's a market that's going to be around for a while, and one that you'll hopefully be trading with the smalls very soon. And then finally here, if no one throws out any more questions, we have a question about the bid-ask spreads. James, I'd love for you to go look at them in your platform, check them out. They have been much tighter this last month than the first month of our launch. That was a huge question, a question that we got everywhere we went. Liquidity, liquidity, liquidity. What's up with that bid offer spread? At points being 20 cents wide, which thankfully at just $1 tick is only $20 wide. If you were 20 ticks wide and NASDAQ futures or anything else, that's hundreds of dollars, but still 20 ticks wide, not something that we like to see, not something that you traders like to see. It has been tightened up. My friend here, Anna, who does a lot of the number crunching and support of market makers and liquidity providers, I see her updates on a daily basis. The average bid-ask spread in all four of our products, I think, is coming in under 5 or 6 cents. That's 5 or 6 ticks, equating to $5 or $6. And so, I mean, you see it especially between 8:30 and 10 a.m. or 12 p.m. here Central Time. You're seeing those markets usually 1 or 2 or 3 ticks wide, but on average, yeah, getting only as big as 5 or 6 ticks. So definitely did a lot of work to tighten those up for you, James, and I hope you like what you see when you go over to your platform. But I believe that's all the questions here. If anyone wants to throw a last minute one out, that'd be totally fine. But otherwise, I can get out of yours and Cynthia's hair. Thanks so much for having me here.
Well, Frank, I want to thank you very much as well. By the way, while you were talking, I do have an update on the ticker symbol for Interactive Brokers Trader Workstation, and I've put that into the questions panel. It is STXSME. You can add that to any of your watch lists and use all the tools within Trader Workstation. By the way, I also want to let you know that we have been recording today's event, and each of you will get a direct link to today's recorded playback shortly after today's session ends. So if you do want to come back and review any of the concepts that Frank went through today, simply watch your inbox later on for a direct link to that recorded playback, as well as a copy of his slides are available there as well. By the way, before you do exit today's session, if you'd like to review the slides that Frank has provided, notice in the control panel there's a handouts pane that has a PDF that's available for you to download directly from this session before you do exit. But with that, that is going to conclude our session here today. I do want to thank the Small Exchange and especially Frank Kaberna for today's presentation. Super information. Thanks so much, Frank. And also, thanks to all of you. Well, thanks to all of you for joining us here this afternoon. Have a great rest of your day, everyone, and do trade smart. Thanks all. Have a great day.